Hi guys, and welcome to another episode of the Fine Lecture series with Katsi Sikat. I know you look forward to these videos every week, and I'm sure excited na naman kayo about another topic that we will be discussing here in our subject investment, portfolio management, and capital market. So, for this episode, pag-usapan natin yung mga tinatawag nating security market indices. So, plural ng index is indices. But for some resources or some references, they call it indexes. But if you try to look into the dictionary, it's gonna be indices. So for this video, I'm gonna refer to the term indices. Okay. I'm sure you did a lot of reading online because I asked you to research on the different global stock market indices and the different pricing or no, the different weighting method that they use. And the most popular ones are the market capitalization and the price weighting method. I'm sure you're wondering para saan ba yan? Ano bang distinction nila? How do investors and analysts, how do economists use these indices to see the performance of a particular market, of a particular economy. Okay? So pag-uusapan natin 'yan for the next coming minutes. I'm sure for uh, the past few months that we've been together and discussing everything that is related to investments. Kung nakikinig or kayo ay nanonood ng mga balita, especially if it's related with business news, you would be seeing this names. No, you would be seeing these figures on the screen, and they are being reported every day. So if you are subscribed to a cable channel, makikita niyo yung CNN, makikita ninyo yung ANC, you will see Bloomberg, you will see Al Jazeera, these channels, they keep on projecting or showing the different stock market indices results at the end of every day. So ano bang ibig sabihin ng mga yan, ano? As I've written here on my presentation, index are your friends. Well, by the way, it's not the stock market, it's not hindi lang stock market, hindi lang mga in other investments also like fixed income, we have commodities, real estate. Hindi lang yan ang may mga index. So other popular index are also, the consumer price index, the retail price index. So these two are actually aid in computing for the inflation rate of a particular economy. And also human development index. So ano ba ang ibig sabihin ng index? No, hindi ito yung index card na alam nyo lang na pagka bubunot na for recitation sa law subjects nyo. So it's a different kind of index. Okay, so in short, index is a measurement benchmark. Okay, so again, it's a measurement benchmark. It's like the grades that you see in your report cards, and it is a representation of the entire performance of a particular market or a particular economy. So just imagine kung ipapakita ko sa inyo yung raw scores ninyo sa lahat ng mga activities ninyo, it's gonna be what, 800 points, 250 points, and itong mga grades ninyo are being evaluated using also weights. Ibig sabihin may criteria for grading. Like for example, 40% is for your term exams, 25% is for your quizzes, 20% is for your activities and seat works, and then the rest would be for your attendance. So just like that, the index is a measurement of any performance. If your grades is a measurement of your performance, index or indices are measurement of different performance of a segment in the market. Okay, so therefore, ano ba to? Okay, so just like your grades, it's a snapshot. It's just a tiny picture of the entire thing. Okay? So definitely, since we're gonna talk about stock market indices, it measures price movement. It measures the performance of a market from a given period of time, which you wish to measure. And it provides a single figure to ease comparison. Kasi kung ang pinag-uusapan natin, billions of pesos, right? Iba ang performance ng US sa China, sa Canada, sa Europe. They're earning billions of dollars. But when you try to reclassify this information into a tiny bit of information. So let's just say it's 1.25, increase of 3.5. Nawawala yung bias ng bigger figures. So it makes you concentrate on a way that it can be easily digestible by your readers or your analysts. So basically, indices are so helpful in a way that it makes analysis more easy. Okay? So ano ba yung benefits? If you are a financial planner, if you are a financial analyst, if you are an investor, you are a trader, the indices are being used as a barometer or it gauges. Pag sinabi mo kasing barometer, it measures eh. It's a tool, it's an aid. It's a model that you can use to see the performance of the market without looking into the individual stock price. Okay? So again, like what is mentioned a while ago, it's a snapshot. So instead of looking at the bigger picture, which can cause more, let's just say, ma-misinterpret mo pa or magkamali ka ng analysis if you try to look at the bigger picture, mas madali kasi if yung mas how do you call this, mas comprehensive and mas simple. In short tayo, mas gusto natin yung simple, right? Kasi it keeps away the room for errors. Okay, so ayun. Next, it provides a consistent picture of the mood of the market. And when we say mood of the market, we are not talking about ano ba, kung pag sinabi mo kasing mood, it's the atmosphere. So in a particular day, you would know if the investors are very much afraid. You know if the investors are very hesitant. You know when the investors are very much active. So this mood is not it cannot be seen if you look at the stocks individually. Okay? So the only way that you could see the, like I said, the mood and the preference or the activeness or the inactiveness of the investors, there is no other way but to look at these indices. Okay, and lastly, since our subject is about investment portfolio management, fund managers, specifically those who create portfolios for investors, use these indices to gauge whether their selection of assets were able to gain momentum, they were able to gain profit or loss at the end of each period. So ganun ka-importante that we are knowledgeable about these indices. So it's very interesting to know as finance students, right? So definitely ito yung pinaka-exciting na part eh. It's when you've executed your portfolio and at the end of a certain period, you would be excited to learn and know kumita ba talaga yung portfolio na ginawa ko, in-execute ko. Was it able to overpower the performance of the market or was it underperforming? Ibig sabihin, if you are following the PSE index and at the end of the year, it gained around 12% and your portfolio was able to earn more than 12%, and you know that you have overpowered or you have over projected the earnings of the market. So as a fund manager, yan yung isa sa mga qualifications na hinahanap, no? Yung ma-forecast mo yung future trends or mahigitan mo yung performance ng stock market as a means of a comparison. So there you go. So indices are just a guide. Indices are just a performance of it's just a benchmark of performance. So kung wala tayong point of comparison, always we don't know if we're doing well or we don't know if we're being competitive. So understanding indices will help you as a student understand uh, whether, there is certain competitiveness in a firm, in an economy, or in a given industry. Okay, so much for that introduction. Now, let's go to the examples of different indices that are being used globally. This is an example of American firms. This is the NYSE, or the official or the biggest stock exchange in the US. This is where the iconic Wall Street is actually housed. No, yung mismong avenue kung nasa ng New York Stock Exchange is called the Wall Street. No, pero hindi Wall Street ang tawag sa stock exchange, but it's the New York Stock Exchange, one of the biggest stock market in the entire world. Okay, and then the NYSE has so many indices inside it. So hindi lang isa, unlike here in the Philippines, you only have one major composite index. We call it the PSE composite index. But in the US and other huge countries like China, no, more than one yung kanilang malalaking indices. And then we also have here the Nasdaq, which is another index of the US, which caters naman into tech stocks. And then we have the London Stock Exchange. We have the FTSE. For those of you who were able to select European countries, I'm sure you've bumped into the different indices in the European continent. Napakalaki niyan. Nahati sa Western at Eastern Europe. Pero syempre, ang isa sa pinakamatanda at pinakasikat ay ang London Stock Exchange. So as you can see, it's divided or segmented into the bigger or the biggest index to the middle size to the industry segment, and then the different how do you call it? It's more on, ito yung pinaka-filtered. Okay? So from the big picture to the smallest picture. As you can see here in the next row of information, we have the small cap companies, the mid cap companies, and the large cap companies. So in the US, since very diverse yung kanilang stock market, sinesegment din nila yung kanilang mga index based on the level of capitalization. So as you can see, meron dito value between 250 million to 2 billion in terms of market capitalization, ha. And then pag mid-cap companies naman, it's 2 billion to 10 billion. And lastly, we have the large cap companies, which is more than 10 billion in value. And then here, it's segmented into different industries or sectors. So we have the pharmaceuticals, we have the industrials, and then we have the utilities. And lastly, merong mga index naman na ang mini-measure is more on specific characteristics. Like for example, here we have green stocks. So ibig sabihin mga company that are promoting sustainable energy. And then we have sin-free stocks. So ito yung index na kung saan hindi included anything that has something to do with alcohol, tobacco, gambling, and weapons. So dito, papasok na yung preference ng investor. So if you're the type of investor who is an advocate of climate change or advocate of green energy, you'd go for this type of indices. So ang gumagawa na nito is syempre yung mga managers na fund managers. So they're the ones who decide on ano yung composition ng index na pagbabasehan ng performance o ng benchmark. So as you can see, there are a lot of indices. Sa US pa lang, it's almost 5,000 indices ang makikita ninyo. Kaya wag na kayong magtaka dun sa research ninyo na you have to identify which index should you be getting for your research. Napakarami talaga. Wag na kayong magulat. It's just but natural. But what we are trying to look into is this one, yung mga bigger index na meron tayo. At sinusubaybayan ng marami, both local investors and foreign investors. Okay? And here is an example of what I was trying to point out kanina, no? Sa UK, no? Sa Great Britain pa lang, yung kanilang official composite index is the FTSE, but their FTSE index is subdivided into so many indices also, smaller indices. So the FTSE 100, FTSE 250, and we also have 350. So based on the number itself, alam mo na ang mini-measure niya ay 100, 250, 350 firms. Okay? So, dun pa lang, alam mo na, hindi sila pare-parehas ng lilitaw na stock index. Okay? Because in the FTSE 100, it measures the largest 100 UK companies, okay, which covers about 70% of the UK market value. So, dito pa lang, kung market capitalization or market capitalization weighting yung index or weighting index na ginamit dito, you know that when this index moves up and down, ang firm na may pinakamalaking market capitalization is ang may pinakamalaking impact. It's because we're talking of the largest 100 UK companies. Okay? Ibig sabihin, if one firm inside this composite index moves, the entire, kasi 70% no? It really would reflect the entirety of the market. Kasi 70%, not bad. Malaking percent na rin ito in terms of market value. And then the next is the FTSE 250. We're talking of the 250 medium size. So kanina, we've already mentioned that in the US and in huge economies like also UK, Canada, China, they are subdividing their stocks based on capitalization. So this one is medium size, 250. This is 100 lang. Okay? 100 lang. Pero these are the largest. Ibig sabihin, nasa large cap. So as compared dito sa 250, yes, mas malaki. Pero in terms of size, medium. Medium lang siya. Okay? And then the FTSE 350 is a combination of the FTSE 100 and the FTSE 250 indices. So the 350 is broken down into industry sectors. Okay? So hindi na siya based on the capitalization. Hindi na po. Ang pinag-uusapan na natin dito is different industry sectors. And the FTSE all share, okay, covers over 800 companies. It includes FTSE 350. It includes the FTSE 350. So kasama siya. Itong nasa FTSE 350 is also included in the FTSE all share. Why? Because it covers 800 naman. Okay? So it accounts for 98% of the UK market value. This is used as a benchmark against which diversified share portfolios are assessed. Again, let me reiterate what is being written here, or which sabi niya, this FTSE All Share is used by fund managers if they wish to compare. Kasi sabi niya, benchmark against. Okay? So, if you wish to compare your personal portfolio, which are very much diversified, kasi nga naman, it covers 98% of the UK market. So, I hope mas maliwanag na at this point that indices are multi-purpose in terms of you would want to know, ito yung mga big bosses how are the big bosses performing? In terms of medium size naman kasi, these are the, kumbaga dun sa stock classification natin, these are actually the glamour stocks. So if you are wishing to invest in non-blue chip stocks, kasi ito mga blue chip stocks na talaga to highly established. So if you're looking for the growth stocks, or you are highly invested in growth stocks, you would look into the FTSE 250. But if you are, if your portfolio is more on the upper 350, no, kumbaga mas conservative or mas malawak na basehan ng performances compared to the FTSE 250, you would want to cover everything. Conservatively, you go for the FTSE 350. But for the sake of really looking into the overall performance of the market, you go for the FTSE All Share. So these are all reviewed every 3 months. Okay, so companies with a share price growing strongly and a significantly increasing market capitalization replace those whose share price and market capitalization is static or falling. So, ibig sabihin, guys, yung indices natin are also being rebalanced every now and then to make the information adaptable to changes. Ibig sabihin, there would be times that from a medium-sized company, magle-level up siya into large companies, and these indices will then be rebalanced or re-evaluated. Okay, so mapapalitan ng bagong players itong 100. Malay mo yung 250 mapunta sa 350, yung 350 mapunta naman sa 250. So the point is to make your evaluation really timely and reliable, you have to make sure that the composition of your index is also being monitored, evaluated every now and then. So in the case of the Philippines, yung top 30 in the case of the PSEi, yung top 30 most actively traded companies, and in terms of market capitalization also, yung may pinakamalalaking market cap ang included dun sa ating PSEi, since our index is using market capitalization as its weighting index. Okay? And as compared to other countries, yung ating index ay ito lamang, 1, 2, 3, 4, 5, 6, 7. We have 7. This is segmented into different sectors, and this is the all shares. Okay, ibig sabihin lahat. Okay, lahat ng firms sa ating stock market. And the PSEi is the average kasi 30 lang, 30 of the top 10 highest market capitalization sa Pilipinas. Okay? Now, kung itatanong nyo, since nasabi ko na, no, ang PSEi, ang weighting method na ginagamit ng ating index ay market capitalization. Now, when we say market capitalization, sige, tignan muna natin, ang capitalization ng PSE or ng Stock Exchange ng Pilipinas as of this year, 2020, we have a total of 329 firms listed in the stock exchange. And the market cap is 13.95 trillion as of 2019. So this is from 274.12 billion to 13.95 trillion. So ganun kalaking amount ang nakapaloob sa ating stock market. Meaning, this was the amount of money that our stock market was able to generate for the year 2019. If you're gonna ask me, ma'am, meron bang ganyan kalaking pera yung mga banks natin? Well, I'm sure they could produce trillions also, but they cannot reach this amount. Only the stock market could produce this amount of capitalization for businesses. Again, this is only for commercial use, not for government use. Kasi meron tayong mga government securities which is handled by our treasury, but definitely when we say the Philippine Stock Exchange, it's exclusively for commercial use only. Okay? So, ganun kalaki. Now, going back to my slide, now that you know that the PSEi is using market capitalization, later on we will discuss how do we make sense of that market capitalization weighting method. Okay. Now, here is a summary. It's a summary of a few of the commonly used index or indices in the US. Okay? Nandito yung ano nila, yung kumbaga scope ng mini-measure nila. But then, what I just want to project here is that for every index, meron silang different weighting method na ginagamit. So, in the Amex Composite market cap, Dow Jones Wilshire 5,000 market cap, Dow Jones Industrial Average, this is price weighted as compared to the market capitalization weighted. This is using price. Again, it's a different. Ngayon, paano mo babasahin at paano mo maiintindihan yung difference nitong dalawang to? And here is one unique index, Nasdaq 100 equal weighted. Nakasulat naman eh. It's using equal weighted method in measuring the performance of a particular index. Okay? So it's very interesting to know how come itong NYSE Composite is using market cap. How come the Russell 2000 is using market cap? How come S&P 500 is using market cap? Okay, so what is the difference of all of these three? We would find out later as we go on the computation, as we see the consequences of each computation. Okay, and lastly, let me just show you that aside from Dow Jones, aside from S&P, aside from Nasdaq, marami pang ibang mga stock market indices na sinusubaybayan ng maraming investors all over the world. So we have Japan, which is the Nikkei 225, France, which is CAC 40, and then Germany, how do you pronounce this? I think it's etc. Okay, etc. DAX, and then we have the Hong Kong and China. So we have an example is the Hang Seng. All right. So napakarami pa aside from all of these things, aside from what is listed here. The reason kung bakit minomonitor din ng mga foreign investors, ng mga economists, yung galaw ng bawat indices sa iba't ibang bansa is because, remember, kung dito sa Pilipinas, we have the PSE Composite Index, which is composed of the top 30 firms in terms of market capitalization, these are the market movers. Okay? When the market movers are active, ibig sabihin the economy is good. So, definitely, this large economic players, once nakita mo na very active yung kanilang stock market indicators, you would know that the mood of the investment environment in this given countries is an indicator that the economy is doing good. But if the investors, the companies are losing its worth, kasi market capitalization ang pinag-uusapan natin, no? Ibig sabihin nawawala yung pondo sa ekonomiya, and instead of these firms using the money, let's just say hypothetically speaking, no, walang corruption, talagang purely ginagamit, na-utilize for the betterment of the economy kasi it creates employment, no? Ibig sabihin everything is doing well, right? So now that we are in a pandemic, I'm sure you are more concerned, you are more aware that when there is crisis happening, whether it's in US or in China, the smaller countries are affected. Okay? Kasi when the bigger players are affected, the smaller players are also affected. Now, I want you to look at this line chart out of the information which I got from saan ko na nga ba kinuha tong data ko? I think it's from Investing PH. Yes, thank you Investing PH for for my information right here. This is the performance of our PSE composite index from 2015 until November 6, 2020. And as you can see right here, no, 2016, since the presidency of President Duterte, our composite index showed a steady growth. Okay? Actually, nag-peak na siya at almost 8,800. This was in 2018. But slowly, after December 2017, yeah, this is 2017, the index slowly went to a downhill. And if we try to investigate, ano bang nangyari after 2017? What went wrong? And here, this is in 2019. No, 2019, December. As you can see, hindi na kayo magtataka bakit biglang bumaba tayo from a steady 7,000, no, nasa 7,000, almost, yeah, 8,000 mark, consistently at 8,000 mark. Biglang baba tayo ngayon ng 5,200 by the time nag-peak yung coronavirus pandemic. Talagang you can see that maraming mga businesses, maraming mga investors ang probably pull out ng investments, naapektuhan talaga yung operations, and you can see here in our stock market index. But slowly, no, as of November 2020, we are on a positive momentum, especially now that the US elections is over. Nakapag-declare na ng bagong president. We'll see kung paano gagapang ang stock market index natin from 6,600, although napakalayo, no? We were almost on the 9,000 mark, which will mark a milestone on the Philippine stock market. Well, by the way, in 1992, when the stock market was finally incorporated, the base value of our index was at 2,000 plus. No? So we've come a long way from that era, from 1992, now that we are in the 2020. No, we are now at our, ang tinitignan natin dito, mabit natin yung ating 8,800 mark and makarating tayo dito sa 9,000 points. But definitely, no, for some countries, napakaliit pa itong 9,000 mark natin. Kasi for them, nasa 21,000 mark na sila, nasa 16,000. So we have a long way to go as a country. So meaning, habang dumadami yung nag-i-invest sa atin ng mga businesses, habang dumadami yung mga Pilipinong nag-i-invest sa stock market, our stock market, our index will continue to project growth. So the secret is, whether we admit it or not, if we want to help the Philippines, if we want to help our economy, we should learn how to invest, because there is no way to be more patriotic but to, hindi lang mag-save. Kasi ang savings, hindi naman nagpo-project yan sa ating stock market index. Yes, somehow, kasi meron tayong mga banking institutions inside the stock market, but definitely, investing and saving is a different story. So again, if you want to be patriotic in the future, you want our economy to grow, we should start investing, we should start trusting our economy para dumami pa, hindi lang yung employment, no? Hindi lang yung tax contributions, but whether we like it or not, yung capitalism can also be a key player in making sustainable developments in the future. So tapos na tayo sa era ng kapabayaan. Since nag-aral tayo, we would know better kung anong kumpanya ba ang magli-lead sa Pilipinas into prosperity and sustainable development, which will combat yung climate change, yung corruption. So we are the new breed of the future investors in the Philippines. Okay, before we head on to the computational part of this discussion, let me just first emphasize that the scope of our topic would only cover the stock market, which means it's only focused on equity indices, or it's most applicable for equity indices. But aside from equity indices, we also have indices for fixed income securities, commodities, real estate, and other investment alternatives that are available in the market. So for now, let's focus on equity indices. So as I have shown a while ago, our different indices are classified into different classifications. We have the broad market. So nandiyan yung Nasdaq, nandiyan yung FTSE, the PSEi, the Nikkei 225. So yan yung mga broad market. And then we have the multi-market, and then sector, and then style. Style because it depends on which type of sector do you want to evaluate. So dito sa style, ang nakasulat dyan is small cap. So meaning, it's more on growth sectors. Kasi pag small cap, nandun ka pa lang dun sa papausbong pa lang. That's why it's called style. Yung kanina naman, yung green stocks, o di kaya naman yung stocks that are not into sin industries. Ibig sabihin yung walang alcohol, walang tobacco, gambling, and the likes. So, we have so many classifications, but as we discuss all of these things, they only boil down to 3 major weighting classifications. So again, the reason why fund managers, the reason why portfolio analysts construct or create indices is because they would want to track the performance of their specific portfolios. Okay? So again, this is used by fund managers, by portfolio analysts on benchmarking their performance against the market performance. So, itong pag-aaralan natin ngayon is specifically on portfolios, personal portfolios. Meaning these are not indices of the market, but these are indices that are used to guide executed portfolios. Okay? So we have 3, which is the price-weighted, market capitalization, and equal-weighted. But before we proceed with these 3 weighting methods, let me just show you how to compute for the price return for an index. Kasi yung una nating kinompute, if natatandaan nyo pa, we have what we call the holding period return. Okay? So, ang holding period at ang price return within an index is somehow similar, but not really the same. Okay, alam ko meron na naman kayong nakikitang formula dito. And I'm sure by now, you won't get intimidated by seeing equations like this kasi alam ko ano na kayo by now kabisado nyo nang basahin yung mga equation at formula natin. Pero pag pinasimple natin, no, it looks like this one lang. Okay. So, let me just read the labels of our table, no. So, the first column is your security column. This is the name of the stock included in an index. So let's just pretend that this is an index and the composition is composed of 3 stocks. And then this is the beginning price, okay? And then this is the ending price. We have the dividends per share and the number of shares outstanding. So according to the formula, okay, so if you would want to know the price return, ito, basic pa lang to guys ha, wala pang weighting na kasama dito, wala pang pagtitimbang, kumbaga nagbe-base ka lang sa price, and you would want to know how much gain or loss is recorded in the index in a particular period. Okay? So, simple lang, what you're going to do is you multiply the shares outstanding. Okay? Ito yung number of shares na hawak mo sa isang index. Okay? Or let's just say sa portfolio mo. Okay? You have 200 shares at binili mo siya initially at 10. You have 100 shares at binili mo initially at 25. 400 shares na binili mo initially at 15. Kaya ang nakasulat dito is the value of the price return at year 0. Okay? So the value of your price return at year 0, or this is the base value or the base date or time. Kaya siya 0. And then after a period of 1 year, kaya siya magiging 1. So anyway, you just multiply that to get the value. Okay, so 200 times 10 is the value of your stock. Okay, so bakit meron tayong 100 dito? You know, divisor, which is 100. Okay, nandun sa formula yan. Okay, D is the value of the divisor. Why do we want to divide it to 100? Kung matatandaan nyo dun sa inyong holding period return, hindi naman siya kailangang i-divide sa 100. So, paano ba sineset yung divisor? Actually, depende na yan dun sa fund manager or dun sa analyst na nagsiset ng index. Sa divisor, kailangan lang consistent ka dun sa divisor na gagamitin mo. But, the reason why you would want to do this is because you don't want to be overwhelmed with so much numbers. Okay? Para lumiit yung value ng index mo at para hindi overwhelming yung number, you just simply divide it to 100. Okay? Para mas, ano ba tawag dito? Hindi intimidating yung numbers. Kasi once the number of shares outstanding is nagiging thousands or millions sila, and then the price also increases, nagiging overwhelming yung mga values na nakikita natin. So, for that to be minimized, you just simply divide it to 100. So, as you can see, without, getting the entire value of your numerator na napakalaki, by dividing it to 100, you will get 105 at the beginning period, and then 120 at the end of the period. So, napakadali lang naman makita yung price return. You just simply apply the percent change formula into the picture. So, the new price minus the old price divided by the old price. So, simply, the price return for this period is 14.29%. So, meaning, there was a gain of 14.29% in this portfolio. Okay? So, kaya ko lang ipinapakita to kasi when you try to evaluate it in a group or in an index manner, lagi the purpose is to simplify the answer. Okay? So, it's just the same. The concept is the same. Yun lang, may divisor tayo na 100. But it means, technically, the substance of the formula is like the simple holding period return. So, new price minus the old price divided by the old price. Now, moving on. Ito, I think this is gonna be the first time that you will be seeing the word total return. Okay? We've seen so many return for the past few discussions, but this one is total return. Okay. Again, index po pinag-uusapan natin, ha? And every time you see the word return, it's always in percentage because we want to know ilang percent ba ang bumalik sa investment mo, no? Return. Now, total return is incorporating your dividends. Okay? So, the moment you incorporate your dividends, you are also taking into consideration the amount of dividends that you received aside from the growth of the value of your stocks. So, kung mapapansin nyo, the divisor is still the same, okay? Because we adopted the same example kanina, so it's still 100. The only difference is we have multiplied our shares outstanding with your dividends per share. So remember, when you are investing in stocks, you are earning dividends not on just kumbaga, parang one time, big time lang. Kunwari, nag-invest ka sa akin, automatic meron ka ng 1,000 or 5,000. No. So, it depends on the number of shares that you have. And then, you simply multiply the DPS or dividends per share to the total number of shares outstanding. So, the bigger shares that you purchase, the bigger dividends that you will be receiving in the future. So, total return, pinagkaiba lang niya dun sa simpleng price return is that we incorporate dividends, like I said. So, if you get your total dividends, you just simply, again, divide that to 100. Kung ano yung ginawa mo sa kabila, yun din ang gagawin mo dito. So, the divisor is still 100. You will get the answer of 3. Okay? So, kanina, yung price return natin or yung value ng price return natin is 120 less minus the old price return. Then you just simply add the dividends and then divide that to the old price. You will get 17.14%. So kung kanina, kung sa price return, we got 14.29%. If you incorporate the dividends that you receive, it's actually 17.14%. So, I hope malinaw sa inyo yun. Napakasimple pa lang naman nitong ating unang discussion. So, why am I including this in my discussion? Later on, we will incorporate this as we compute for the different weighting methods, which is the price, equal, and market capitalization. Okay, so for indices, this is how we compute for multiple periods of return. So there is an example here. It's a 2-year computation of the portfolio return. So, at year 0, of course, wala pa yan. Kasi dyan yung time na nag-start or na-execute yung portfolio. And then at year 1, okay, there is a computed 5% return, and on year 2, there is a 3% computed return. So, pag ginawa natin yan using a base value of 1,000, by the way, this is being assigned. This is usually given. Depende yan sa laki ng portfolio, value ng portfolio na hawak mo. So, in this case, the base value is 1,000. Okay? Remember, yung stock market natin sa Pilipinas, nag-start yan with a base value of, ilan ba? But anyway, yung composite index natin is nag-start at 2,000. Okay? So, every time na nagkakaroon ng growth, nag-i-increase yung ating index. So, similarly, for this example, ang sinet na base is 1,000. Okay? So, sabi niya inception value or base value, it's the same. Okay? So, if at year 1, syempre wala pa namang return yan, 1,000 pa rin yung value at the end of the period, but at year 1, hindi pa pala, wala pa palang period dito. At the end of year 1, if there is a 5% return, we simply multiply or we adopt the time value formula 1 plus I. Okay? So, the formula here is 1 plus I, kaya naging siyang 1.05 kasi plus 1. So, that's 1 period. So, 1,000 multiplied by 1.05, okay, 5% yan, remember, hindi yan dapat 1.05 I should say. Okay, 5% nga pala. 0.05. So, that would be 1,050. And at year 3, you don't just simply multiply 1,000 to 1,000. Kumbaga parang compounding siya, no? As you can see, this would be 1,000 multiplied by the initial growth at year 1 and then multiplied by the growth at year 2. Okay? So, you're not gonna add 8, hindi siya magiging 8% na total growth. No. Okay? So, separately, you will multiply. Para ka lang nagko-compound. Compounding interest. You're using the compounded value at the end of the period and then you multiply that to 1 plus I again. So, ito, long cut lang but it means the same. So, based on the accumulated value. So, now you understand that our index, as the return increases or decreases, no, naaapektuhan yung value at the end of each period. So, the larger the return or the growth, the higher the growth of our base value. So, ganyan nagdi-decrease at ganyan nag-i-increase yung ating mga composite index. Now, if in the future, you will be future fund managers, you would be future portfolio analysts, whenever you decide to create a specific index for the portfolio that you're creating for your clients, you should be answering all of these questions. Okay? So, which target market should the index represent? In the case of index funds, I know wala pa tayo dun sa topic na yun, but index funds are actually replicating the stocks that are inside the composite index. So, for example, the PSEi is composed of 30 stocks. So, yung magiging laman ng index mo would be the same index that the composite index has. So, kung yung 30 na nasa PSEi, yun din ang index na i-adapt mo dun sa index na ginagawa mo for your portfolio. Okay, so whatever returns in the market, ganun din yung magiging return ng personal portfolio mo or yung portfolio ng client mo. And then, next question, which securities should be selected from the target market? Okay, so kanina, if you would go for sectors, if you would go to style index, if you would go for multi-sector, no? Parang yung FTSE 350. So, it's up to you kung anong mga securities ang included dun sa index mo. How much weight should be allocated to each security in the index? So, later on, pag-uusapan natin itong weighting na ito. Next, how should the index be rebalanced? Kung kanina, dun sa diniscuss natin earlier, every 3 months nire-review yung index. So, in your case, how frequent should you rebalance or reconstruct your index? Is it 2 months, every 2 months, every 3 months, semi-annually, or annually? It should be stated on the portfolio agreement. And lastly, when should the security selection and weighting decision be re-examined? Again, this is a case-to-case basis depending on your client, depending on the management decision. Kasi every time nagkakaroon ng rebalancing, if you are a portfolio holder sa mga insurance companies or sa mga investment companies, every time na may gagalawin yung mga fund managers, they are being paid for that. Okay? So, malaking issue na pinag-uusapan kung tuwing kailan binabago yung yung laman o composition. That's the term I'm looking for. The composition of the index. All right, finally, we have arrived at our computational part. This is it. Totoo na to. Okay, so let's start with the first weighting method that we will be discussing, which is the price-weighted method. Okay, so it is defined as this is composed of a single share of each of the index components, regardless of the price of the share or the size of the underlying company. Okay. Just to, make this definition more clear for you guys. Sa price-weighted index, well, unlike sa market capitalization index, kung nakita nyo at napansin nyo yung definition kanina nung FTSE 100, it is only composed of top 100 companies in terms of market capitalization. And so, the bias on that weighting method is that mas malaki yung impact ng mga firms na may malalaking kapital as compared to the firms na maliit ang kapital. Okay, may bias. But when it comes to price, regardless of your capitalization, kasi ang pinagbabasehan lang ng performance na to is the change of price, not the change in market capitalization, but the changes in the price movement. So, if ikaw, ang habol mo bilang isang investor is that you would want to monitor growing companies, because growing companies would really invest their efforts para lang mapataas yung value ng kanilang stock price. No? Pinag-aaralan to sa strategic financial management. Okay. Yung tinatawag nating economic economic value added, or the EVA, pinag-uusapan yan dun sa subject na yun. Because most of the securities included in price-weighted indices are really active in terms of trading. Kasi pagka pabago-bago yung presyo ng isang firm, you know that the demand and supply side of technical analysis is about price. So, ayun, regardless of the size, ang pinag-uusapan lang natin is the price of the stocks inside the index. So, we have here an example. Okay? So, we're gonna compute for the price return and the total return in this specific example. And we're gonna we're gonna use price-weighted method. Okay? Sige. We're gonna compute for, okay. Okay. Alam naman natin, kapag ka price, pinag-uusapan natin, may bias dito sa price ng stocks. So, let me just navigate you dito sa ating elements ng ating table. I-zoom ko lang ng konti so that you can see it more clearly. Okay. So these are the stocks. We have 5 stocks in this particular portfolio, or in case this index that we are trying to evaluate. So let's just say this is an index we are trying to evaluate. And then the next column is the shares, the number of shares in the index. In this case, we only have 1 share per stock. Okay? And then ito nilagyan ko na lang ng date so that we could imagine na itong mga stocks na to ay binili mo at the beginning of the year, and this is going to be the stock price at the end of the year. Now, what we're going to talk about is how much yung price increase and decrease dito sa index na to using price-weighted method. Okay. So, since given naman tong mga to, itong value na to, alright, we are going to compute first for the price return. Okay. Again, this is in percent. And then we're gonna compute for the total return. Again, ulitin ko po, pag sa price return, we are only focusing on the price. Sa total return, we are also incorporating the dividends. And then this W signifies weight multiplied by the price return. And then we have here weight multiplied by the total return. And then we have the ending weight, because this is the beginning weight and then this is the ending weight. So, ano ba tong weight? Bigat. Okay. Weight is, let's just say magkaroon ng changes. Okay. Changes in price. The security with the biggest weight would tendency siya yung pinaka maaapektuhan dun sa changes ng index. Okay. Gawin natin yan. The first thing that you have to do is to add all of these prices. Okay? So, all in all, the index has a total price of 101.5. So, para makuha natin yung weight, we just simply divide each security dun sa ating total price. Okay? So, that's how you do it. Lagyan natin ng dollar sign para hindi gumalaw. Okay. Ayan yung weight. So, pagka tinotal natin yan, you know that's 100%. Alright? So, ayan. Parang yung ginawa nyo lang dun sa inyong standard deviation coefficient of variance formula. Okay, so malinaw. Pag sinabi nating weight is bigat, in short, dito sa example na to, given that this is 49%, ibig sabihin dito sa index na to, ang may pinakamalaking impact is this one, security A. Because, unang-una, kung titignan mo yung roster ng securities, ito ang may pinakamalaking price. Again, since price weighting method ang ginagamit natin, the company with the highest price, in case magkaroon ng changes, increase or decrease, ang may pinaka mabigat na composition dito sa index na to is this security A, followed by security B, and then C, D, and E. So, this is the weighting. Okay? Now, anong magiging effect nitong weighting method na to dun sa magiging return ng sa magiging return netong index natin? Okay? Now, the next thing that we have to do is kulang ako ng ano. Let me just insert entire row. No, entire column. Insert column. So this is going to be total dividends. Regardless kung 1 pa yan, ano. So total dividends is, again, shares outstanding multiplied by your dividend. So in this case, since 1 lang naman as it is, but I'm showing it for you para lang ano, just so we know kung magkano yung total dividends na na-receive. Okay, for the price return, okay, very easy lang naman yan, mga kapatid. This is going to be the old price, so the new price, okay, lagyan natin ng parenthesis, huwag kalimutan, parenthesis, PEMDAS, guys. Okay, so 55, which is the new price minus the old price, divided by the old price. So we know that at the end of the period, the change in this index for security A is 10%. So ida-drag lang natin. And then we're gonna get the answer. Now, for the total return, okay, ano ang ating formula kanina? It's the old price minus, so the new price minus the old price plus the dividends divided by the old price. So let's incorporate that in our formula. Okay, so this is the new price minus this one plus the dividends, total dividends, divided by, lagyan natin ng ano, para hindi malito yung Excel, diba? Divided by the old price. Okay, so that would be 11.5%, and then we just simply drag. Okay, now, the weight of, dito na papasok yung ating sagot actually. So, dito sa dalawang ito, ang pinaka-importante dito sa table na kino-compute natin. It's because, since our weighting method is focus on the price, ito ang pinaka-kailangan natin. Itong weighting percent na ito. Okay, so it's gonna be the weight multiplied by the price return. So, we just simply put this weight multiplied by the price return. Alright, so that's gonna be 4.93, and then we just simply drag. Okay, now, burahin muna natin yan kasi hindi pa ako nag-i-explain. Okay, next we have the weight for the total return. Again, multiply to total return. Alright. 5.67, okay, and 1.97. Okay, now, what we want to look, or the answer to this table, oh, by the way, our index value, mamaya, sige, hindi ko na alam anong uunahin kong computein, ano. Okay, so ito, pag tinotal natin to, gaya nga nung formula na nakasulat dun sa PowerPoint, no, balikan lang natin siguro. If we're gonna look back at the formula, no, it's just the summation of the number of constituents versus the unit price. Although nandito na kasi tayo sa total return, but it means the same. It only, you get the summary of everything. You get the sum value of the price return. Okay, so ang gagawin lang natin, we're just gonna simply add that up. Okay, add that up, right? Okay, and then gawin nating percent. There you go, 3%. Ayan, 3.45 and 4.33. Now, this answer, actually, kung titignan natin, ma'am, bakit mo pa pinahirapan yung sarili mo, no? Eh, kung pwede naman natin gawin to. Ayan. O, anong gagawin natin? Adi yung percent change formula, 105 minus 101.5 divided by 101.5. You will get the same answer. Mami, bakit ang haba pa nung pinakita mong solution? Ano? So, same answer lang, 3.45. Magic, ano? Same. It's just the same answer. But why am I showing this to you guys? It's because gusto kong makita ninyo yung effect ng bawat, how do you call this? It's really looking into a more detailed picture of, for security A, it's 10%. This one is negative 12%. So this is a shortcut version, but this is a more comprehensive view of the index, diba? And you can see the effect of the weighting method that you've used, which is the price weighted method. So makikita mo yung impact nitong bigat, okay, dito sa ating total return on the index. So if it's 3.45%, if the return is 3.45%, you know that the change in each security, ito nagbago 50 to 55, attributable siya. Saan na? Dito kasi 4.93 yung in-increase. For the total index, sa kabuuan, okay, 4.93% yung increase. Kasi kung titignan mo, kung weight lang naman, I mean, if you try to look at this, no, kung 55 and 50, let's just say it's 55 and 50 equals 55 minus 50 divided by 50. Okay, yun yung percent change right? So that's a computation for percent change. It's 0.10. It's 10%, but because there is a weighting, merong tayong bigat na sinet dito sa index na to, it's no longer 10%. It's 4.93% for the entire index. O diba magic? Kikita mo kung for some analysts, kasi napaka-importante nito na they're seeing this column right here. Kasi ito talaga yung pinaka-meaningful na analysis dito, itong dalawang column na to. So, paano nag-come up yung 3.45? Ano yung mga securities na malaki yung ambag dito sa increase na to? So, whichever of the securities are affecting the entire index, makikita ng analyst. And so, nakaka-amaze na you can see all of these things just using numbers and mathematics. Well, anyway, to end the computation for this table pa lang ha. Okay, we just simply get the total. No, ito nandito na pala yung total. Same mechanism that we did kanina. We just simply get the weight of the new price divided by this one. So, lagyan lang natin ng dollar sign para hindi gumalaw. Alright. And then, we simply drag it. And then, gawin nating percent. Okay. Let's show some decimal places right there. Okay. So, nagkaroon ng change, no? From 49%, naging 52.38. And then, this one is 20.95. Nagkaroon ng decrease. So, as the prices changes, and so the weight also changes, no? Ibig sabihin, itong weighting natin is not constant. So, every time nagkakaroon ng price changes, the weighting, the weights of each security is altered or nag-change. And so, therefore, itong return natin is also, it depends on the weight of the securities, and it depends on the increase or decrease capacity of the index. Napakaganda. Anyway, for the index value, since we are using a price weighting method, the index value, nga pala, iba pala yung index value, iba pala yung divisor. Divisor is 5. Okay, ayun. Anyway, for the index value, since sa price weighting method kasi, the index value depends on the number of constituents or the number of inclusions of stocks that are inside the index. So in this case, this is 101.5. We simply divide this to 5. Okay? So for our index value, it's going to be 20.3. Okay? So how do we incorporate that? For the price return, we just simply multiply our index value to the to the computed price return at the end of year 1. Okay? So, wag nyo kalimutan, lagyan ng 1 plus, kasi at the end of each period, yan, 1.3.45. So, at the end of the period, the value of your index would increase to 21. Okay? That's for the price return. But if we're talking of total return, that would then be your index value multiplied by 1 plus this one, 4.33. So the answer is 21.18. Again, this would be the answers to ano ba? Sa mga quizzes ninyo, this would be the ones that you would be computing. Okay, so I hope naliwanagan naman tayo dito sa ating unang weighting method. We're just on our first, so the next one would be the equal weighting method. Before we proceed to the next weighting method, let me just show to you how stock splits work. Whenever you're evaluating price weighting index. Kasi since price ang pinag-uusapan natin, kailangan ding i-adjust yung index kapag ka nagkakaroon ng mga stock splits. So ano ba yung stock split? This is a methodology of the firms to make the shares cheaper. Okay? Ibig sabihin, mas gusto nilang maraming makabili sa firms nila, sa stock nila. That's why they're doing stock split. So, ang ginagawa nila, dinadagdagan nila yung outstanding shares nila, and then, nagkakaroon ng stock split. So, technically, the effect in terms of capitalization is the same, but what happens is, nagiging cheaper yung price. So, originally, before the stock split, okay, this is a 3-for-1 split. So, 30 divided by 3 would be 10. But if it's gonna be 30 divided by 2, it's gonna be 15. So, depende yan kung ano yung ratio ng stock split. Okay. So, as we know, sa price weighting method, you just simply add the total value of the prices, and then you divide that to your N, which is your number of stocks inside the index. So, in this case, 60 divided by 3 is 20. Okay, so this is before the split. And then after the split on the second day, all right? So naging siyang 10. 10, 20, still the same, and then 10. Total of 40. Pero ang mangyayari dito, mag-change lang yung divisor mo. Okay, so instead of 3, dahil nagkaroon na ng stock split, we will not consider this as part of the N. Okay? But magically, because math is a science of exact things. Kung ba paano nagagawa yan ng math, but it's really good. Nakaka-amaze minsan. Ito, okay. So since nag-change na yung ating yung ating denominator, which is yung N natin naging 2. If we add this, which is 40 divided by your new numerator, it's gonna be 20. Diba? It's still the same. 20 pa rin. And if you try to compute for the percent change, you would know the change is 0. Ibig sabihin, kahit magkaroon ng stock split, okay, mag-iba yung price, the divisor and the change will be unchanged. It's still 0%. So, walang effect sa index yung stock split. Alright? Magic, diba? So, that's how you do, or that's how you apply stock splits in the price weighting index method. Okay, let's now proceed to the second method, which is the equal weighting method. Okay, with the definition of this index, this index doesn't really focus on the price alone. Okay, as mentioned here on the definition on the slide. Unlike sa price-weighted method, from the title itself, price, sa equal-weighted, it doesn't focus on the price alone. Rather, it is measured by the percent change in the price. Okay? So, regardless kung gaano pa kalaki yung ang maganda kasi nito, we are seeing we are seeing the percent change and not the price, like for example, no, from 500 to biglang 550 or 580, ang mini-measure mo doon is yung change in price lang. But with the equal weighting method, you are comparing the percent change to the percent change. Okay? So, mas conservative siya as compared to the price lang, kung magfo-focus ka lang sa price. Okay? So, again, it's very similar but different somehow. Although parehas silang sa price pa rin tumitingin, hindi siya totally 100% sa price talaga. No, I hope you can imagine what I'm trying to say. Na although yes, nagbe-base siya sa price, but still ang basis pa rin niya is not directly biased to the price, but rather on the price change or the percentage change. Okay, let me show you how the equal weighting is done in another example. Okay, so as you can see here, the index value is 100. So this one is again assigned for this particular index, but not all index value are 100. So for this particular example, ang index value niya ay 100. So alam niyo naman paano nakuha tong 5%, no? You just simply subtract the new price to the initial price divided by the old price, so you will get 5%. Now, itong weighted return, this column right here, tatanungin nyo kung ma'am, paano ba nakuha tong 1%? Like I said kanina, dun sa definition, we're not just looking at the price change. We're not just looking at the changes in price, but rather we are looking at the percent change. Okay? So, this 1%, kaya siya na tinawag na weighted return, it is looking into, or tinitignan niya yung entire change, this one, and its effect on the entire index. Alright? So, for this case, 5% divided by the number of constituents. We have 5. 1, 2, 3, 4, 5. So, since we have 5 samples, we divide this return to our n. So, we will get 1%. 6.875 divided by 5, you will get 1.375. So, instead of looking at the price change, you are looking at the percent change. So, using that formula, you will get if you sum up everything, total mo lahat yon, you will get 3.26%. Ngayon, try natin siyang gawin dun sa ating formula, or dun sa ating previous example, So, kung dito sa price return, kasi dito lang naman siya mag-change, let's take note na lang muna dun sa answer natin. So, previously, with price weighted, lagay natin, okay? Price and then equal, so that we have a point of comparison. Price and equal, the price return is 3.45%. And the total return is 4.33%. Okay, oops, ba't ko ba nilagyan ng... Alright. Okay, so using the concept of equal weighting, let's try to analyze it, no? Kasi since same lang naman, no, itong total return lang din naman ang pagbabasehan din talaga natin. Sorry, itong price return. Okay, let's try to do it here. So it's equal to 10 divided by, so since 5 din yung ating constituents, just simply divide that by 5. Okay, then drag it down. Drag it down. Okay, and then total. So the answer is 10.40%. Okay, 10.40%. And then dito sa total return, right? Equals divided by 5. Right. Okay, total. We got 10.88%. Okay, so ganun lang, ano, after getting the percent change in the price, right, you get the average of that change by dividing, it depends on the number of constituents that you have in your index. Now, kung makikita natin, ano, it is a huge difference. Napakalaki nung differences compared kung ano lang, kung price lang ang pagbabasehan natin versus the impact of the percent change in your index. So that's how it's done. Okay, so ituloy lang natin yung ating discussion about the equal weighting method, but this time, what if meron na siyang number of shares in the index? Okay, kasi ito magmamatter ito in terms of the dividend. So let's see what's the difference between incorporating huge number of shares in the index as compared to 1:1. Okay, so first, let's see kung paano tayo mag-assign ng value. Okay? Kasi kanina 1 lang ito eh. So kapag equal weighting and you have to assign value dun sa inyong shares, of course, it's gonna be different since you're going to multiply your number of shares to your share price. Okay? That would be 2,000. Now, this is the most important kasi, itong weight. Okay? Yung weight is really the basis of your ending weight. No? Ang sinasabi ko dyan, para makuha mo yung weight mo, huwag kang pumunta sa weighing scale. You have to get the total amount of the value, which is 10,000. Okay, and by the way, kung makikita ninyo yung ating flow of number of shares dito, since this is a cheaper stock, mas marami yung shares dito, and since this is an expensive stock, mas kokonti. Alright, kataon lang na 2,000 lahat yung value. Alright, again, for the weight, we just simply get the numerator divided by our denominator, which is 10,000 total. Drag that. Lagyan muna natin ng $sign para hindi gumalaw. Okay, then drag. Ayun, 20% each. Now, for the value of the shares ng end of the year, this is the new price. Right? Divided by the number of shares. Again, yan. Drag. And for the total dividends, multiply that to your number of shares. All right, and then drag that down. For the price return, this is gonna be unchanged, kaya ako siya kinopy paste na lang since it's just the same, this one and this one divided by this one. And for the total return, ang pinagkaiba lang dito is we are incorporating the dividends, correct? So we're gonna incorporate this column, so that would be equal sign new price minus the old price, okay, plus this one divided by the old price. There you go. And then drag that down. Oops. Okay, so ang ginawa natin kanina, remember, since equal weighting ang method natin, equal sign divided by 5. Right. So same goes with our total return. So dito lang magkakaiba kasi meron ka ng dividends. So kanina walang dividends. This time, we are incorporating dividends. So pag tinotal mo, ito is still 10. And this one is, oops, drag that down to sum. Then gawin natin siyang percent. Okay, so there you go. Okay, so nakuha mo na yung sagot for the total price return and the total, nandun na pala sa baba. Okay, na-incorporate ko na siya dyan sa baba. Nalagyan ko na rin ng formula, 1 plus this one and 1 plus that one. Okay? Syempre, again, sa mga indices natin sa market, ito lang ang kino-consider natin. But kung sa portfolio, syempre, iba yung sa price return, iba yung sa total return. At the end of the period, ito ang pinaka-importante, the waiting period is really, kumbaga, malaki yung kanyang difference when it comes to measuring the ending balance of your portfolio. So, kung kanina yung ending weight ng price weighted different siya, mas different dito sa equal weighting. Why? We're going to use this 20% with your new prices. Okay? Ending weight. So this one is value of the shares multiplied by, okay, for the ending weight, di pala dito muna, no? I forgot, we have to get the total value of our ending value, which is 11,040, and from there we can get the weight of each stock, okay, divided by the total. Still, so kung makikita ninyo, no, it's still, oops. Lagi ko nakakalimutan yung dollar sign, and dollar sign. Yep, it's still 20%. Let's drag that down, and then that's it. Okay, so that's how you do the equal weighting process. At yun ang difference niya sa regular pricing method. Alright, so from 10.4, as you can see here, from 10.4 as compared to the 3.45%. No, napakalaking difference, but still, if you understand the reason why they are different, no, again, as compared to the price change alone, you are incorporating what the change in the percentage change, right? Okay, finally, we have arrived at our last weighting method that we will be discussing for this episode, and it's the most popular and it's the commonly used weighting method even in the existing indices all over the world. Most of the indices are market capitalization weighted, simply because the huge companies with huge capital are really the ones who are very much active in terms of operations, in terms of number of probably diversified industries where they operate. They are really the market movers. Kaya marami sa mga indices, ang minimeasure is based on the capitalization. So, from the title itself, hindi na kailangan pang i-explain by this time. You know that the weighting method depends on the market capitalization. Okay, so let's try to solve the same problem kanina. This time, mas malaki yung shares outstanding. So SO, hindi ko na sinulat yung buong label. So SO means shares outstanding or the numbers of shares outstanding. And this is the beginning price. Nawala yung date. 01/01/19. Okay. So this is the beginning price. And of course, since kanina, no, ito ang pinaka-importanting kinukompute natin, yung weight. Kasi pag dito nagkamali ka na. And actually, yung mga final results ng price return natin, total return natin, or the ending weight of the portfolio or the index depends on how this weight column is. No? Magmula kanina dun sa price, sa equal, the way we compute for the weight here is very important. And it makes each index measurement different from each other. Okay, for us to get the market capitalization, again, shortcut ko na lang kasi masyado mahaba. Market capitalization is simply, multiply this to your share price. Okay. So kung kanina, value ang pinag-uusapan natin, right? So this time, we are just labeling it as the shares, number of shares outstanding. Kasi yung kanina, price ang pinagbabasehan. So equal and price-weighted index are, we're talking of the price. Okay? We're talking of the numbers in the index. While this one, it's shares outstanding. Okay, so yung market capitalization, for you to compute that, simply number of shares multiplied by the shares outstanding. So magkaiba po yun. So kailangan very particular din kayo sa mga labels na nakikita ninyo. You have to understand them very well or else magkakamali kayo ng analysis. So okay, going back to the weight, of course, total lang natin. Now, as you can see, yung market capitalization as compared to the value, no? Yung sinasabi kasi natin kanina is value. This time, it's the capitalization. Ibig sabihin, the amount of money that one stock is able to raise out of selling its stocks. So, kung titignan mo, if magkakaroon ng price movement, itong si stock B, mas malaki yung weight niya dito sa index as compared to stock A or stock C or stock D or stock E, simply because the weight of this stock is bigger. Kahit hindi pa natin computein kasi nakikita naman natin, it's 250,000. Okay, so simply get the weight by getting the product. Yung ano bang tawag pagka, how do we call it? Ayun, kailangan ko pa siyang i-google kasi nakalimutan ko na. So the result of these two, this is the numerator, this is the denominator. So the result is called the quotient. Ayan. Nakalimutan ko na, ginugel ko pa. Okay. Bakit 0? Why? How come? Yep. There you go. Hindi pala siya naka-percent. Kaya pala. Yon. Okay. And so, once we get the weight, I think this is one of the most important parts, or one of the most important reasons bakit tayo nagko-compute, no, para makuha natin itong weighting method na to. Anyway, going back to our table, simply again for the market capitalization ending, just do the same mechanism. Oops, maling pindot. Shares outstanding. Okay, then kunin natin yung total for the dividends. 3,000. Oh, asan yung dividends natin? Nasaan yung dividends? Hindi siya na copy. Copy. It's just the same. Okay, ayan. Same lang naman, sabi sa problem. Okay, next total dividends would be, of course, mas marami to kasi we're talking of alright. Then, for the price return, okay, I think this is going to be unchanged, really, kasi ang weighting, ano naman, aside from the price return, hindi ko na sinama yung total return, ano. The price return is, it's, since we are talking of benchmark lang naman, indices are benchmark of performance, yung growth or decrease in the value of the portfolio. Ang pinaka-importante is you know how to compute for the ending balance of your portfolio based on the different weighting method. So sa mga exams niyo, sa mga exercises, most of the problems will revolve around this one, the price return and the ending weight. Okay? So again, price return is just the same. Hindi yan hindi siya affected kung ano yung weighting method na ginagamit. So same formula. Kung napansin nyo, no, yung price return natin hindi naman siya nag-change. Doon lang dito sa weight. Okay? So sa price return as it is. Divided by, okay, price return. Okay, dito lang tayo nagkakatalo-talo. The price return would be multiplied to the weight. Ayan. Right, then percent. As you can see, ayan. And then total. Okay, there you go. 1.49 or 1.5. And then the ending weight is equal. Okay. All right. Oops. I never learned my lesson, right? Okay. Ayan. Pero kung titignan mo, no, yung ending weight is, kumbaga, it's either magbe-base yan sa market capitalization or sa price. So, as you can see, it has a different impact as compared to the price. Kasi kung sa price, mas malaki impact ni security A. But since in terms of capitalization, mas malaki yung impact ni stock B, mas malaki yung weight for stock B. So as you can see, no, siguro by now you would see the difference of each weighting method, starting from this point to this point and to this point. Okay, and I think with that, ano, we can say, kung babalik tayo dito sa ating ano kanina, in terms of market capitalization, it's 1.5. Kaya kung titignan mo, yung 1.5 ang may pinaka maliit na change kasi yan ang pinakamahirap ma-achieve na change. Kaya yan din ang madalas na gamit. Kasi prices can always change based on law of supply and demand. But when it comes to the market capitalization, we're talking of the number of shares outstanding. And for the number of shares outstanding, you would want more shares to be traded in the market. So when there is low trading levels in a particular market, hindi masyadong gumagalaw itong market capitalization index, or pag yung composite index is used, ang gamit ay market capitalization, very sensitive yung price movement, no? As compared sa price, yes, prices of stocks move every day. We get that. But sa market capitalization, kaya mas commonly used siya because we are talking of the numbers of shares rather than the price. O, diba? And when it comes to equal, we're talking of the percent change of the price. Kaya mas malaki. Kaya konti lang talaga ang gumagamit ng equal weighted kasi masyado siyang enthusiastic. No, mas masyado siyang kumbaga it's measuring a different price. But for these two, kaya mas commonly used yung price saka market capitalization, they are a better way of gauging the performance of the stock market. And by the way, let me just show you this. Ayan. Pakita ko lang sa inyo itong macro trends. I know binigay ko to sa inyo nung second assignment ninyo dun sa review questions. As you can see here, lahat ng mga commonly used indices in the US, aside from S&P, we also have Hang Seng, which is in Hong Kong, and then we also have Nikkei, Bovespa, which is in Brazil, even yung during the time of the presidency of President Trump, nandito rin. Diyan, hindi mo talaga maikakaila na negosyante si President Trump kasi nga naman, ang focus niya the entire time was the stock market. Ang ano nga sa kanya, ang kinikriticize nga sa kanya, masyado siyang nag-focus sa stock market instead of the welfare of the people. Pero totoo naman, the numbers won't lie to you, no? This one is, pinakita, ito yung Dow Jones ng 1929, bear market, in talagang how it significantly fell from 350 down, as in down na down, because this is the recession. 1929 is the Great Depression that the American people experience. Ano pa ba? We have the Shanghai Composite Index, which is in China. And then there is also a comparison of Dow Jones and Nasdaq since 1971. We all know that the Dow is the major, one of the major composite index of the US and Nasdaq as well. So dito, kaya siya kinukompare, it's because these are the major industries versus the tech industries or the tech giants. So that's also very interesting to know. What else? Ayan, so yung mga common indices nasa nasa macro trends. If you're interested to look into this website, you may do so. Aside from that, we also have commodities. We also have the energy. Ayan. Syempre, meron ding precious metals. And then we also have other market indices. So tingnan nyo, dito indexes. Pero for some reference, I said, diba, indices. So ayan, marami pa. You can see all of this, all of these indices available online at hindi mo na kailangan pang gumawa. Pero syempre, ang pinaka-importante dito, guys, you know how to look into them right now. Kasi before, you're just seeing lines. But right now, when you say, nag-increase yung balik tayo dun sa balik tayo dito sa ating PSE index. Now, you know how hard it is for the index to climb hanggang 8,800 almost, no? For you to achieve this kind of value in the stock market, there has to be a lot of capitalization coming inside, and not just simply coming inside. You have to sell them, kasi kung hindi mo siya nabenta, puro shares outstanding lang, ibig sabihin wala, it's not moving, right? So the more shares that you sell, the higher the composite index will be. And the more investments that the country, the more investment that goes inside an economy or or in a stock market, the higher the composite index will be. Kaya nga, ang stock market is always the barometer of prosperity or the barometer of activeness in terms of business activity inside an economy. Now you understand, no? And I'm sure hindi nyo na makakalimutan at iba na ang tingin ninyo sa mga composite index the next time you watch the news, the next time you see anything on the internet or read a magazine regarding it. Ngayon mas naiintindihan nyo na. So I hope you enjoyed this discussion. That ends our episode for this topic. I know it's quite lengthy, but I'm sure you've learned and realized so much. Thank you. Thank you for watching, and salamat at na tinapos ninyo and you stayed with me until the very end.